The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We got the S&P just refuses to stop climbing. It's up on there. Let's see, 9 points up right now, but 1657. We got the Nasdaq up 3.5. We have the Russell up 4 points. And we're going to run the Dow. It's up 78 on the day. Just another screaming day there. We got gold getting slaughtered down $31. That's a $3,100 move on a single gold future contract. We got silver down 0.704. Massive move on silver. Looking over at copper, down 0.0235. We're going to see what this means on the deviations here in a minute. We got oil down about 21 cents at the moment. Corn is up a whole tick. And soybeans is down 5. So when one thing's not moving, something else is. That's why I love the futures and forex markets, future forex markets. You can hop in and trade a variety, and you're going to get something that's going for you. Euro dollar down 65 pips. Pound dollar down a pip. Aussie dollar down 24 with the euro yen down 54 pips. Pound yen is down or up right now. It's sort of inverted right there. You got the pound yen up 28. USD CAD is flat. We got the USD yen up 10 and the USD franc up 13 pips on the day. So that gets you caught up on the current market activity. And so the next thing that we're going to need to check out right here, and I can pull this up, we'll get a chart going, and we'll go through and look at some of the instruments from last night. And so what we can see right here is, let me delete all my drawings off this chart. And we'll go in. Where is there it is. All right, so get the drawings out of the way. And we're going to go through and check out the news reports. Had a variety of news, information come out over the evening. So let's look at it last night. There's a little bit of information on the Aussie. Their motor vehicle sales, down lower than expected. The wage price index about the same. And we can see, not necessarily had just a massive impact report right there at about 9:30. And so we can go on over here. And, there's a little bit of a drop. But, I mean, it wasn't just a complete cremation of the Aussie. But, it dropped and just sort of hesitated right there. Felt like right back to the settlement price of the previous day after the announcement came out. Moved, let's see, 890 from about 906. So, I mean, you got about 30 pips off of it. And then a little bit later, it moved on down to 0.5, the 0.7, and pulled back up. And so nothing major, not necessarily a newsworthy trading event. That's why I didn't call it out yesterday as one to be checking out. And then going through and looking at some of the other things, we had the euro dollar had some pretty high impact announcements. So let's go ahead and look at it. And they released their German preliminary GDP. So obviously a very important number. That one came out and had a decent impact there. Came in at 0.1, lower than expected. They thought the GDP was going to come in at 0.3. And last time it was negative 0.6. So better than last time, but worse than expected. And they also had to revise the last number down to negative 0.7. So it was a negative revision and missed expectations, both at the same time. As you can see right there, the euro dollar just right after the news. I mean, you can see where it came out at, right there at 2 o'clock. And right before that price, it was at 29.34. And let's see if we just go to say like right around, give it about, say an hour. We had to move to 29.30. Let's see, is that right? There we go. Yeah. All right, 28.97. So, we got about 30 pips right off of the news, but it just continued to hammer down on it. Did not let up. We'll go through some of the other news. But over the course of really the entire night trading session, moved it on down into the morning opening session here. Really, I guess that was the morning for London. But moved them on down all the way down to 1 deviation. As you can see, another 1 deviation day. And as we, expect, as we're looking for, and it moved it like right to that 1 deviation level there on the euro dollar. And so, which is nice. I mean, it's working. That's what we expect. We expect it to move it down a deviation. And you can go in and, the trailing stop method. I'm always talking about this and teaching this as a way to, use the deviation levels. So if you go in here, you go short right here on the breakout, and that should be a little bit sooner. But let's just say we're going short on this when we got in, whatever, got out, got back in. So we're short. We're waiting for a close below. You could have got out right here right after the news. So it closed just below there. And then you had another short entry. So it had another short entry right here. It pulls back, breaks below the low, so we get in. And we put a stop loss right up here. And then we trail our stop. So 5 ticks below, this closes below. We trail the stop. Move it on down. What happens again? This bar right. Let's see here. Not that one. Not that one right there. Closes below. Trail the stop. And you could add on to the entry if you wanted to. And so if you wanted to add on, like you could have literally added on right here on this trade. And because you had another pullback and another drop. And then it drops on down and pulls on back. As you can see, it breaks the low, so we get in again. If we want to continue to add into our position to scale in. And so this bar closes below it, below this deviation, the 1 deviation level. Subsequent bar closes above it. And without being stopped out, another bar closes below it again, so we can trail our stop down even further. So right there, we're able to trail that stop on down. We're out of the trade. We have a series of winning trades by using just that simple formula. And so you go in, you're out right here. And, another entry, I didn't even post that one. It would have been about right here. So with a stop move down. But, so right there we got that one. And then we have one right here. I mean, this is, pretty much flat on that trade. And then we have a trade right over here. Moving down, moving down, moving down. And waiting for it to move. Okay, so we move the stop down there again. We move the stop down there again. And we finally are out on that one. And let's see here. We got another entry right over here. Move the stop down, out on that one. And we got another stop right here. I mean, this is a very, very simple trading method, basically flat on that. So, I mean, you're catching about 30 pips on this one right here, 2,900 down to about 2,860. So, I mean, that's not massive. That's about 40 pips right there. And then, 28, about 28.75 to about 28.60. I mean, it's 15 pips, and then, you just got a few pips on that one. So, but I mean, a nice, easy, simple trading day. Just waiting on the pullback, drop down, trail the stop. And there are a lot of ways to, trail your stops. So these are just some of the methods. One of the ways that I show also, of course, is the whole divergence. So when you get a new breakout right there, it's like when that happens, so you can trail a stop down further. And so the divergence is that goes down. We go down on here to RSI. We find that level. And go, that one's down. Is this one up? Yes, it is. So on this trade, you actually could have trailed it even tighter to right here. And then, of course, you trailed it on again, and you're eventually, stopped out on that trade. And then we go right here. Could we have trailed it tighter without waiting? Because sometimes that waiting on that deviation level can be a little painful. So, what methods do we have that we can take advantage of? So we go right over here till it breaks the low. We go, okay, hey, do we have divergence? Let's find that same bar, that same one right there. Okay. And then let's track it over to this one. Yep. See the RSI angling up and the price angling down. And so we're able to trail it. Now, we also trailed it at the exact same time on the close below the deviation. So didn't even have, wasn't really another move. It was the exact same trailing stop. That's a nice confirmation for us. And then we go on over here, and we get another one. And then the same thing, basically what happened, we trailed it at the exact same time. It happened to close right below the deviation when it did that takeout. And let's see, very small, very slight divergence. And then we have one more going on right here. And we go over here and go, okay, so if I trail that, do I get divergence? Yes, I do. So we could have added in one more stop, because what would happen if this thing didn't close below? Then the deviation. So if it wasn't able to close below again, then we still would have had our stop hanging out up here. So we got the close down, but we want to move it again. So that's what allowed us to actually move our stop one more time to right here, and then finally when it closed below the deviation, we were able to move it yet again. And after that gets hit, okay, then especially around one deviation, more than around 0.7, 1, 1.5, when you start hitting that deviation stop loss method, now, 0.5, I mean, that's, the mark's going to oscillate a little bit, but when you start moving down towards that 70 percentile mark, then that is really where I'm expecting the market to either reverse or chop when that gets hit. So as you can see what happened, it did pull back. It did a decent little pullback right off of that. So we got to move up about 30 pips on it, but then it came right back down, gave it all back up, and really it's just been in chop since 8 a.m. And so it's always good if you're going to be trading in the morning to hop down and maybe go through this process, draw this on your chart like I'm doing right now, and it can really help you out as far as learning how to trade and learning how to trail your stops objectively. And it's a very simple entry method. I mean, you don't see my chart loaded with 1,000 indicators. It's clean, it's easy, it's objective, it's duplicatable. So just a cool way to trade. And we can hop over them. You can do this on a lot of different things. But let's go ahead, and that's the euro. What other euro announcements came out? We had the Italian preliminary GDP came in worse than expected at 4 a.m. So we can see right about here. That gets released as a little bit of a pop. It sort of pulls down. It's a medium impact. Italy is not as big of the, obviously, the European economy as Germany is. And then the pound has a slew of reports. Some are good, some are bad. And then at 5 a.m., the euro has the flash GDP come out, and that does not meet expectations either. The flash GDP came in at negative 0.2 on an expectation of negative 0.1, so it was off, but it wasn't just, disastrous. And so when that came on out, you can see it moved on down, and it's kept going. But, I mean, it was just really like bad news report after bad news report for the euro. And all that factored in. Think about this. All this bad news coming out for the euro overnight, and it didn't move like 1,000 pips, okay? It wasn't catastrophic. It was just bad news. It did exactly what the market said it would do. The market said this is how far it should move based on what's coming up in the next 24 hours. And that's what the deviation levels are. There's what's coming up in the next 24 hours. And you can get a hold of these inside of our site. We list them there each and every day. We update them at 8:30. We have them on FX. We have them on futures. We have them on Nadex. We're constantly adding in more instruments. But you can see here's FX pairs. Here's a variety of futures markets. And we also have on the Nadex instruments. So very helpful. And again, if you don't know how to get a hold of that, just hop on over to the main page there at tfnn.com and scroll until you see the box spread analyzer. And what you'll see right here, okay? Diagnostic box spread analyzer. And there you go. You can sign up for it and get going. All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so just looking over here and going through some of the markets and talking about how the euro dollar sort of gets slammed, but just moved, again, perfectly down to that one deviation level. So let's check out some other things. We had the pound. Had a little bit news come out last night. And had a solid deviation move. And this is the other form of the deviation stuff that you want to be aware of down here, okay? This is a deviation move from high to low. So 0.5 to 0.5, so -5 to +5, that 2.5s, that is a full deviation. And so whenever it, like, say, hits a 0.7 and pulls back, you're basically sort of looking for 0.3, right, below. And so it actually exceeded the deviation. Made a very difficult trading market. If you're just looking at 10-minute bars, could be done profitably, but still necessarily not as simple as I'm sure a lot of you like your trading to be. And so let me pull up an example here of the pound dollar. And yeah, there's a lot of movement going on there. So we got the pound dollar up right here. We got the settlement levels up. And I may need to get more information. There it goes. Okay. So as far as today, you know, had a long right there, and I can get rid of this whole thing. I go into what I like to do is I like to time out regions where I'm usually not trading, like when I'm asleep or whatever. But so there was a short right there, but I mean it was literally a long, short, and just trying to catch those trades. I mean, definitely doable. The deviations help, but having a full understanding of price action, which is what I use for trading, definitely will clean up that whole chart. You would actually see the long, and then you'd see the short, and then you'd see the long, and then you'd see the short. And not that you're going to catch every perfect turn at high-low, but you'll catch it on the pullbacks. And going down here, let's check out a couple of the other methods and see what we got. We got dollar franc, so we can go on and check that on out. It had a few reports come out last night, and it really moved, and it gave it all back. So, I mean, look at that. So it literally gave it all back. They had their zoo economic expectations report come out. They had their PPI come out. So a whole slew of trades, but went up, hit 0.5, moved on up, broke through 0.7, no problem. Came all the way back down, then decided, it's not done yet. And right around 4 o'clock, whenever they, about 5 is when they released the report for the zoo economic expectations for, and it's ZEW, by the way, it's not ZOO. And it's a survey of institutional investors. If you want to know where to find more information out about the zoo release, you can go over to zew.de. So, and it'll have the zoo press tagged release and, what they mean on different markets. So they got, this is all the Switzerland reports right here. So, anyways, but moved all the way up, 0.5, 0.7 again, 1, pushing on to 1.5. I mean, almost hit it. Comes on back down, all the way back down to yesterday's settlement closing price. And just oscillating right there. And so remember what I said is, once you hit that 1, okay, especially that 1 deviation level, and your trailing stop method gets hit, expect a reversal or chop. We got a reversal, definitely, and then it turned into chop now. So, and it's been chopped pretty much since 10 o'clock. Well, actually, I guess you could really say it's been chopped since like about 8:30. So, because it's just been in this range right here of about 30 pips up and down over and over on the dollar franc. Now we go in and let's look at the CAD. So the CAD had some news come on out last night, or this morning, I guess, actually, to be more accurate. They had their manufacturing sales come out, and along with the U.S. having some reports at the same time. That came out at 8:30. And so what we can see right here is went up to literally before the news. Okay, before it. The USD CAD had already stretched to 1 deviation and was pretty much sitting right there at 1 full deviation move, the full expectation of move. Well, the report comes in on the manufacturing sales, comes in worse than expected, and the USD CAD gives it all back. It literally goes all the way back down to settlement and gives back all of the gains it made overnight, and pretty decent amount of gains for the USD CAD. It's not just the most volatile pair in the world, but pulled it all back, and yesterday we got a decent move, and it was just continuing on that trend until that report came out, and then it just, like I said, every bit of it right back. So great news trade right there to take advantage of. And we can go in there, let's check out the USD yen. So the yen, I mean, they're just going crazy with all of their inflationary, deflationary, which way is up, down, sidewards. And we'll look at that one. And when we come back, we'll talk about some of the reports to look at that are coming up for the remainder of the week. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour, and just looking through a few different things over here and checking out the markets. Looking at the USD yen, and moved on up 0.5, back on down 0.5, and perfect 1 deviation move from high to low. And so we can see that move right there, and obviously was a perfect move as far as 1 deviation move. But, choppy nevertheless, but still plenty of good entries along the way on the way down, and then a reversal along with some long entries on the way up. So it depends upon how you like to trade, but the way I trade, so we go here, we're going into a long now, so we have a buy there, and then I have one more buy literally just like right there, okay? And then I get a reversal right here, well, which I can't do anything with, but it's reversed now. And then I get a short right there, okay? And then right over here, you get another reversal where it basically makes it high, peak, low, back. And get a very, very small, basically a scalp trade going off right here. And now waiting for another trade to set up. So, there's a lot of different methods, a lot of different ways to trade, but that gives you a little summary there on the currencies. Let's check out the indices. Okay, so they've been screaming on up today. We got the S&P moving on up. Look at that. We're at 0.5, 0.7, and climbing. So is it going to keep going? Is it going to move to the 1 deviation level? So maybe, maybe not, right? Anyway, so we got our long entry right over here. We're pulling on back. We have another long entry. So pull back, entry, break out of that previous bar's high. And we go in, entry, pull back, break out of the previous bar's high. So all along this way, we can trail our stops every time we close above a deviation level. So we trail it right there. And then we again trail it right there. And so what does that do? Well, that puts our entry, not stopped, finally stopped right there. So we're out of that trade. We got this entry right here. Stop, stop, and not stopped. Where do I put my stop loss on each one of these? When I started the trade, I put it 5 ticks below the low of the pullback. So market came in, market pulled back. Okay, so right there, there's the lowest price since the high of the pullback. So right there. And so on each one of these, then we got, another stop and along the way. By the way, every time that pullback breakout occurs, you can also tighten your stop. So all on these ways. So we got pullback breakout successful. All right, great. I'm going to tighten it up again, a little bit tighter. And then right here, we got it, let's see, pulling up, pulling back, breaking out, tighten it again. So basically that stop right there becomes my stop for everything. Then it closes above, that becomes a stop. And then once I tie in the RSI, then we get even more. So we can go over here, we can go, okay, well, when did it break it initially? It broke it right there. So I can take this one, I can draw it over to that line. Guess what? RSI divergence. So almost every single time. And so I can now tighten on up right there. That basically removes my risk on that trade. And I go in here, and I get a high to a high right here. And I go on down and go, do I have another RSI divergence? So let's see. Maybe I do. Maybe I don't. On that one, no RSI. Don't move your stop yet. And right here, what about this one? Do I get another RSI? Is it turning around? Is it getting weak? So let's see if the RSI tells us that or not. And RSI did not tell us that on this. But we did get a close above the deviation, which did move our stop up. So between the RSI, between moving it up to the lows of every pullback, and between the deviations, those three things combined became very effective trailing stop methods to help us lock in our profits as the market's moving. Will we go long again? Will we go short? Well, depends upon what happens right now. On the setup, let's say this bar doesn't make a new low, and this bar or subsequent bar breaks the previous bar's high, then I'll go long. Okay? If this bar, let's say, doesn't make a new low, but then it breaks this bar's low, then I'll have a reversal on my hands and be looking for the market to potentially turn around and be looking for a short setup. But what I do know is I came up here to this 0.7, close to the 1 deviation. I broke it. I am expecting flat to reversal right now, not necessarily just a really strong uptrend. So if I decide to get into a trade this late into the day, especially this time of day, after this big of a move, then I'm going to be lightening my contracts. So if I do one S&P, or if I do like say 5 S&P E-minis, I'm maybe going to do 1 or 2 S&P E-mini contracts. So big thing is don't give back all your profits at the end of the day. If you want to trade longer for whatever reason, and you like just to trade 8 hours a day, whatever you're up by, whatever I'm up by 11, half of that I can't lose. Meaning, if I'm up $1,000, then I don't want to give back more than 500 of that. I don't want to risk giving back. Obviously, I don't want to give back any of it, but I don't want to risk giving back more than half of that before the day's over. So $500 is my risk limit, say, if I'm up $1,000 for the rest of the day. So that way, if I do give that back, then at least I walk away and I didn't work for 8 hours for nothing. And let's see here. So that covers the S&P. Let's check out the Dow. So on the Dow, it screamed on up to almost the exact same pattern. I mean, literally just from settlement to 0.5 to 0.7 to almost 1 deviation before pulling on back and hitting that same stop on the close above right over here. And, I mean, literally, if I drew it, you almost wouldn't even be able to see the difference. You can even see the RSIs are almost lining up down there. They're still on the chart. But you basically take that trade right there, grab a nice, what is that, 79-point run right there on the Dow. If I hop on and go into the Russell, so the Russell, we moved it to 0.5 deviations. I mean, we just, barely broke it. So we were able to move up that stop right there on the 0.5. Let me grab this price indicator. I put it out of the way. So right there on the 0.5, we were able to move that. But we also, this is why it's always good to have additional stop methods, not just one. But we'll go right here. Got a stop method right there. Why? Why do I have a stop? Well, because it came down, the lower high, and then broke the high. Okay, came down, lower high, broke that high. So got one right there. And over here, came down, lower high, broke the high. Got one right here. What other ones do I have on this trade? So we came down, lower high, broke the high. So we can go right there, and then this one came down, lower high, broke the high. So we got right here. Okay. Came down, lower high, broke the high. I don't know if you're getting the pattern here, but high, lower high, new high. All right, every time that happens, trail stop. So pretty simple formula, okay? And all the way up. So we got that. We got the deviation level, also tightening our stop. Okay, so we had it here, but it helped us move it again. So we have several different objective methods moving it on up. And then we add in the other one that we've been talking about over and over again, which is the divergences. So I'm just going to go ahead and pull out every peak to new peak. Okay. So right here, let's make the list. And we'll see which ones out of all of these are actually going to show us divergences. Alright, so we go over here and go, alright, we got this. Obviously there, not a divergence. And we can go over here. We'll see if we get another one. So here to here. Nope, getting a lot of strength. Things still going. That is good. Okay. So here, and market's not as convinced. We actually got a divergence. So we moved up our stop right there on this bar. And so do we get another one? Well, we have another one right here, new peak. So we're going to take this and go from this peak to this peak. Nope, showing some strength. That's good. Market's still running for us. And we'll go to the next one. So now we have this one right here. So right here, we got this level to this level right here. Nope, market says, hey, I have a little bit more in me. So we'll keep going. All right, so we got here to this level. This one I'm going to have to really zoom in on, the RSI. We got a 72.53 with a 74.07, so we do have a divergence. By the way, we also closed above the deviation level right as that divergence kicked in, so we basically have a double trailing stop trigger. Doesn't mean you get out, it just means definitely trail your stop. So as you can see, we have all these trailing stops all the way up, over and over again, trying to help y'all pick this up as we go. Every pullback is another potential entry right there along the way. Obviously, the further it goes, the more likely it is to reverse. So, but every one of these is a potential entry. And, you know, basically right here, so you obviously can't trail it till you're trailing it above your entry price. So you have your stop loss. This one trails, hit right there. And then we go a little bit further. What about right here? Oh, we got to add in that entry also. There we go. So we got this entry right here. Trail. So that. And we have another entry right here. And we have, I mean, look at all these. I mean, this is really adding on to the position. Okay. Got another one right here. Got another one right here. And finally, ran out of steam, pulled back. And we lost a little bit on that final trade at the top. So not too bad, right? So I mean, catching 983 to 991. I mean that's I guess 990 by the time you're out. So that's 7 points. That's $700 in the first contract. 984 to 990. That's $600 in the second contract. 985 to about 990. That's $500 in the third contract. Going in at 987.50 to about 990, that's $150. Then getting in at about 989 to 990, then that's about $100. And then losing from basically looking at right around 990.50 to 990, then you're looking at losing about $50 to $100 on that last trade. So overall, I mean, really not a bad day at all. Very simple trading methodology. Scrolling on down, looking a little bit deeper, let's check out the NASDAQ. So the NASDAQ right here, not a single deviation level in sight. So you're going in. Do we have anything else that would have helped us today? I don't know. Let's see. I didn't even trade the NASDAQ today. But I'll show you exactly how the same method would have worked out. So we go in right here. Okay. And so we got our pullback, our entry. We have our stop loss right here. And then do we have a divergence on this level from here to here? No divergence happening yet. No divergence there as well. And so along the way, I mean, you have nothing going on. You're really just flat. It went all the way up, no divergence, pulled all the way back, nothing happening. And you're about, you're a little lower than where you got in. There's nothing happening on NASDAQ at the moment. Usually we get some nice activity, but NASDAQ has just been quiet. So let's go ahead and check out the, let's see, we got the Russell, we got the S&P, I think we got the Dow. So, yeah, we got the Dow covered. And now let's go in and check out our commodities. Gold has been moving, and it feels huge, but it's really just about a deviation. So all the way down, same thing, got that 0.5, 0.7, and that -1 deviation. We go on into silver, so we're sitting right there, right where we expect, by the way, the market to go. Okay, silver. So we're going to go in on this. We're going to catch it. Silver moved 1 deviation overnight. Basically, we hit there right about 4 a.m. It stayed there, just oscillating till about 10. And then it moved an entire additional deviation on down to 2 deviations, and then a little bit of a pullback. So massive, massive move in silver today. We go on into copper. So right here on copper. What's copper doing? Copper's moving on down. Perfect 1 deviation move it down all the way. Trailing your stop. Simple, easy, methodical. Pulls back, goes choppy, and then does a reversal on you, which is what you should expect once that thing gets hit right around 1 deviation. Now let's go in. Let's check out some energies. So over here on oil, we got to move down to what? 1 deviation. Okay. And what happens when that 1 deviation gets hit? It either chops or reverses. What happened? It reversed all the way back up. Okay. I mean, after a $1,600 move. So moves on down from 94.20 down to 90. I mean, it's massive, 92.12. So that's almost $1.80 right there. $1.90, I don't know. So I mean, massive move, and moves down, chops, hits using the deviation method. When that 1 deviation stop method gets hit, do not be surprised to see chop or reversal after that point. So that's usually, I'm not looking to add on if I get stopped on my 1 deviation stop method. I may add on if I get stopped on like an RSI or if I get stopped on something else. But I'm probably not adding on if I'm getting stopped on that right there. And let's go on in now to natural gas. So we got our natural gas up right here. And looking at this, moved on up to 0.5. So we got settlement up to 0.5. And, nothing. So really quiet day. So a lot of times we're getting, I mean, you can see solid deviation moves, deviation, 0.7, deviation. And that basically wraps up everything but the ags. We'll do the ags, and we'll talk about the upcoming news reports right when we get back from this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, welcome on back here to the Diagnostic Trading Hour. And so wrapping on up with our ags, looking on down at the corn markets. And on the corn, what do we got going on over here on the corn market? Well, looking at this, we got it moving down to 0.5, back on up to 0.5. And so just some, I mean, it's a one deviation move day. So what else can I say? That's pretty much what corn is. Hop on over to soybeans. And on soybeans, even a tighter day. So just an interesting move right there. Let me reload my data on it. But basically just a 0.5 to a 0.5 and a little bit higher, lower. But I mean, it's had some definite volatility, to say the least. And it's I love trading the ag markets. I mean, they move really, really well. And if you have not traded them, they are scary to trade, by the way, if you're not trading them with something like, let's see, how do I put this? If you're trading them with futures, because, I mean, I guess that's the really simplest way to put it, right? You can just get nailed on it. So it can be really scary to try to trade them that way. And there we go. It's like something's wrong with my chart. So, but right here, yeah. Okay, so we got a 0.7 down to a 1 deviation move. There's so much movement, and it can be so fast. There is a ton of profit potential. But that same profit potential can nail you if you don't know how to trade it. Or if you're trading with an instrument where you don't have at least a defined risk. And over on Nadex, every instrument has defined risk. So I do urge you to hop on over, check that out today. Go to tfnn.com, click on the Nadex banner, and at least sign up for a demo account under our products, demo account, and you can get immediate access to that. Fill in your username, first name, last name, phone, 15 seconds, and you'll have access. You want a live account? It's only $100 to fund a live account, $100 minimum funding requirement. And no fees, okay, no platform fees, no chart fees, none of that. No broker fees. They have exchange fees, but no broker commissions. So they basically just have the exchange fees. Exchange fees are 90 cents a contract. They cap at $9. So if you do 100 contracts in one order, it's $9. So saves you a lot of money. And again, it's a futures exchange, right? The North American Derivative Futures Exchange. So it's they're basically trading derivatives, future options of futures and forex, and they're regulated, registered with the CFTC here in the United States. So they're not some offshore random company. And but great product, awesome to trade. And over on they got a great YouTube channel full of all sorts of stuff right there. YouTube, Nadex. And so you can go in that, check out their playlist. That'll be full of information for you. And then hop on over here on tfnn.com and check out the Diagnostic Box Spread Analyzer, where I have even more videos and tutorials and the live analyzer that you can take advantage of as you're learning how to trade over on Nadex. But one of the scariest things is I love corn, but hop in there and trade it on a sim account on futures and just watch how it'll pop, 4 or 5 points in a split second. Okay? How do you trade that? Get in there and trade it and just see yourself get stopped out in no time at all. Whereas, hop over and trade it on Nadex, totally different environment. But anyways, check it out, and I think you will be pleasantly surprised, and let me know what questions you have. So you can submit them via email, and you can always listen to the archives. And also, of course, you can call in live each and every day. I hope you all had a great day, and watch out for tonight. We don't have anything major, but tomorrow morning we do have the unemployment claims coming up here in the U.S., and along with core CPI, building permits, foreign security. So definitely USD Yen, USD CAD tomorrow morning at 8:30. Something to check out. Y'all have a great day.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.